Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. I get so many inquiries from people. I've got money trapped in this IRA. I'm scared about leaving it in paper assets. How can I get this into metals? And I looked all over the place and I found Regal Assets. Tyler Gallagher is the CEO. They became a sponsor. I'm in the process of putting my money with them as well. And I'm confident in endorsing this company, and I've got the CEO on with me now. We're going to talk about the mechanics of it and about how simple it really is once you make the decision. Hey, Tyler, how you doing?
I'm doing fantastic, Kerry. How are you?
I'm doing good, too. We had such a beautiful weekend here in New York. No humidity, which is unheard of in New York summers in August, and went to a couple of parties. One of my daughters is moving out your way to San Francisco.
Oh, wow.
Yeah, and my other daughter's birthday, and it was just a phenomenal weekend. And even though you're from the People's Republic of California, it's good to know that there's some people that understand what real money is, right?
Yeah, absolutely. And I'll tell you, speaking of no humidity, that's all it's been in California for the last week. It's been so hot and humid. So we must be getting your weather.
That's unusual.
Or your humidity. Yeah, it's very unusual. Agreed.
Yeah, because it's always dry. It never rains in Southern California, I think the song went, right?
Yeah.
But yeah, it's so interesting the way things happen, because a couple of weeks ago, gold's under $1,600 an ounce. Now it's 1620s, low 1620s. And people are saying the gold bull market's over, and paper's the place to be, the risk-free trade. And people just don't learn from history, do they?
No, I got to tell you this, and I'm glad you brought that up. It's been a very volatile year, to say the least, for precious metals. But one's got to think about that, because there's a lot of things that go behind it. First off, something that is in high demand, there's going to be a lot of volatility, because you always got to remember there's two sides to every sort of financial transaction these days. There's the guys buying, and then there's the guys selling. And these days, the guys selling are more the guys manipulating the markets. You know, they're putting in sales at key times, and they're coming back in and they're buying. I'm sure there's people that literally sit at their computer all day as day traders or whatnot, buying and selling gold as often as they can. If it goes up a couple dollars, they buy. If it goes down a couple dollars, or they sell. If it goes up a couple dollars, they sell. If it goes down a couple dollars, they buy. So a lot of volatility has to do with high demand. And a lot of people should be thinking, well, if there's this kind of volatility, that means there's a lot of trading happening. And if there's a lot of trading happening, then there's a bigger picture. And I'll tell you this, paper is the absolute worst thing you can be in right now, especially when the most, supposedly stable thing that we should have, which is currency, is on the brink of a massive devaluation. They're not on the brink. I mean, it's already begun. And it's really on the brink of hitting a path of no return. And this volatility should be a signal to everybody out there that there's a lot of value in precious metals. And with that value comes volatility, because people are buying and selling. And historically, these institutional buyers, banks, they're buying for the first time in 30 years precious metals. I mean, it started with India buying 200 metric tons from the IMF in 2009. And China's been so aggressive as well. I mean, if countries are buying precious metals, something's going on, because they haven't bought in for 30 years. So volatility, believe it or not, is opportunity. And you want to seize that opportunity because you may not see it again for a long, long time, in my personal opinion.
Yeah, I kind of agree with you on that. And the fact is, if you look at the long-term trend going back to 2000, 2001, that trend, regardless what it's done in the past year, is inexorably higher and higher. And people are sitting on trillions of dollars in their IRAs. They're scared about the financial system, its viability. They're scared of government confiscation of their IRAs. You know, what are those people to do? I mean, you've got some solutions for that, right?
Well, absolutely. I mean, here's the thing. Historically, if you look at any investor's portfolio, it's prudent to have 10 or 20% of your assets in precious metals because exactly what you talked about, it sort of is a hedge for paper failing, stock market plummeting. It's a very important asset because it goes the complete opposite direction of the stock market. And I'll tell you this, IRAs, retirement accounts, they're only going to have, larger beatings in the coming time because a lot of this paper, mutual funds, all this sort of stuff, it's heavily manipulated and it's all paper. There's nothing there. And what's really important for people to start grasping is the cycles that we go through, sort of the investment level, in these financial markets. They typically say there's a lot of these pundits out there and a lot of these people believe that it goes in 20-year cycles, the markets. And here's what's really interesting. When the dollar is strong and it's doing well, that's when you want to double it. That's when you want to triple it. You want to make more of it, And that's when you may go into a mutual fund or a stock or, something that's going to help you double or triple that money. Now, when the opposite happens, the dollar's plummeting. It's losing more value than it has in the history of America, and inflation is on the horizon. The last thing you want is to double and triple this thing that's plummeting. You want to now hedge. And that's what people got to understand. It's not a time to invest, believe it or not, in this sense of the conversation, because, investing in the dollar means that you want more of it because it's growing, but it's not. Now you want to hedge. And personally, I don't believe that it's by chance that the wealthiest people out there right now are hedge fund managers. It's a time to hedge, folks. And when it comes to hedging, you really can't hedge with paper. So you want to do, the tried and true, which is precious metals. Precious metals, which, is really important, is it's got a 5,000-year history, first off. Plus, that's just what we have on record. But from the earliest race that was, here, which, we have on record is the Sumerian race. There's talk of gold and use of gold, and it's gone 5,000 plus years, even to the earlier stages of the United States, all the way up to 1933. Currency couldn't even be printed unless the equivalent was minted in gold. And that's why back prior to 1933, if they had a $20 bill out or certificate, they call it, you'd be able to go to the bank at any time and get a $20 gold piece, which represented an ounce of gold. And, if you had a $10 bill or certificate, you could get a $10 gold piece, et cetera, et cetera, et cetera. And what's really interesting is that now it's just paper. And you look throughout history, monetary systems like this have never worked. They never will work, and they are doomed to fail. So going back is, retirement accounts are in huge trouble. You're only going to continue to see losses. And here's the even scarier part. If by chance you got some magical guy working on your portfolio, putting you into some cool mutual funds that are bringing heavy returns, based on the rate of inflation, you could still be losing money, even if you're doing well. At the end of the day, even if you make $1 million in the markets, if inflation's running so rampant that a weekly grocery is going to cost you $1 million, I'm talking in a hyperinflation scenario, then what is that worth? Nothing. So it's time to hedge. Absolutely time to hedge. It's prudent just in a regular economic environment, to have 10 or 20% of your assets in precious metals. So if you don't have 10 or 20% of your assets in precious metals, it is a must, especially now. And based on what's going on, it's an even larger amount to, whatever helps you sleep better at night, whatever's comfortable. And we saw that. We saw this trend. In fact, We saw this trend growing in 2008 after the stock market collapsed. A lot of people lost their shirts overnight. Constantly across the board, we're dealing with clients who took 40 to 60% losses from 2008. Yeah, after the market crashed. I mean, it's been volatile. A lot of people, it's so funny because we're so distracted. There's so much going on. We've got the Olympics, you've got football, you've got basketball, you've got all of these things to distract you, where you forget about important things. Like in 2009 or 2010, mind you, when the Dow dropped 1,000 points in one single trading day. I mean, these are monumental things people are forgetting about. And if the Dow dropped in 2010 1,000 points in one trading day, rest assured, folks, it is coming and it's going to happen again and in larger numbers. And let me tell you, I was on the trade floor of our office that day, and I was looking at the screen that we have on, and it was crazy to see this happen when the Dow dropped 1,000 points. And it happened so quickly, no one could do anything. Even if you tried to trade on the upside, everything got voided for that day, and all you could do was take losses. So don't think that you're safe in the markets no matter how well it's performing. And since we've seen this happening, what we've gone ahead and we've done is we've focused all of our attention on helping people very simply as well. We've gone ahead and removed all of the mundane and paperwork and all the things that can be intimidating to someone that wants to take their portfolio and put in precious metals. And we've made it simple. Now, this is key, folks, in what I'm about to tell you here. When it comes to putting metals in your retirement account, you got to understand something important. The securities industry is a billion-dollar, maybe even possibly trillion-dollar industry. You've got your Edward Jones, your Smith Barney, your JP Morgan, your Merrill Lynch, it goes on and on. Then you've got your little household firms, you've got little, Wall Street firms, you've got all sorts of companies out there that have grown that only push securities and paper-based assets. And what a lot of people are doing is they're heading down to their local Edward Jones or their Smith Barney or wherever their financial planner is, and they're saying, I got to get into metals. And they're going, no problem, we handle that. And then they have the paper form of it. And that is the worst possible thing you can do, because let me tell you, somehow we've turned everything into paper. Our currency, our investments, even houses. I mean, everything is paper. There's a paper trail to everything. And these days, it's become more important to have the paper than the actual, property. And more people are trading the paper, Wouldn't you agree?
Oh, for sure. Yeah. That's the way they manipulate everything as well, through the paper, because it's literally the tail wagging the dog, right?
Yeah, Carrie, let me tell you, you just nailed it. And I'm so glad you said that. That is what it is. Manipulation. Physical assets are hard to manipulate. If I've got a property and I want to sell it 10 times, how am I going to sell that property 10 times if when I'm only dealing in the physical sense? When I sell it, the person's moving in, I'm done. But if I have the paper form of it, I can figure out how to sell it 10 times. I'm sure I'd get busted, but it's still possible. And that's what's going on right now. It is pure manipulation. There is a lack of precious metals worldwide. There always has been, folks, by the way. I mean, if you gather all the metals in the world, gold, let's talk specifically, it fits 2 Olympic-sized swimming pools. That is it. And think about this. This is going to blow your minds. For thousands of years, 5,000 as I've discussed that we have on record, I'm sure there's more, we only have 2 Olympic-sized swimming pools. Think about this, folks. Are we throwing gold in the garbage? It doesn't disappear. We're recycling it. It turns into a ring, or then we'll mint it into a bar, or we'll put it into our favorite necklace, but it is sticking around. So it's safe to say whatever we find, we're not tossing in the garbage. You're not finding it at your local recycling plant. It's constantly reused and minted and melted and so forth and so forth. So if in 5,000 years all we have is 2 Olympic-sized swimming pools, I don't think anything's changing. We haven't found the Philosopher's Stone. We still have to mine it. We still have to pull it out of the earth through a natural process. And I really feel that it's God's currency. I'm a faithful man. I'm a Christian. And I believe that God's put certain things here that can't be manipulated. And I feel that God's currency to the world is gold. Because in our current state, we're greedy. We have a lot of things that hold us back sort of mentally. We can't be in charge of running a monetary system honestly. And that's what history's shown. So gold is the only honest money out there. And coming back from my tangent is all of these paper-based, they call them assets. I don't feel that they're assets until you have the physical, but basically they're all being manipulated. And so when you go to your local Edward Jones and they go, I have metals for you, and they give it to you in the paper form, it voids out the importance of precious metals, because precious metals have always been physically held. It is the safest way to do it, because these paper forms, especially GLD, SLV, a lot of people don't know, but one, they don't get audited. Okay, so no one knows how much actual inventory is there. And I'm going to guarantee you, especially if you see what the banks have done with this central banking system, we have the Federal Reserve set up, banks have been able to loan for every dollar they get, $9. This is on fractional reserve banking, because banks only have to have a mere fraction because the Federal Reserve will back them up if they ever have any issues. And it's the same thing I feel with these ETFs. They have to have a mere fraction of what's actually trading. So GLD, maybe it has to have 20%, because if you look at its daily activity, there's no way it's possible to have the exact amount of metals to what's trading, because there's so much going on.
Oh, yeah. They could be moving around 2-3 million ounces, tons of gold at the click of a mouse.
Yes.
And so where is it? It's in some bank's basement, and they move it from one bin to another bin, and now you own it. And then when they sell it, they take it out of that bin, and nobody knows where that metal's held. And there's so many dangers with SLV and GLD. Part 2 is available to subscribers of FinancialSurvivalNetwork.com. Go there now, sign up, and enjoy.